morning. Today is Sunday the 13th of September 2009. I'm Kate with your week in Forex from UFXBank. Today we'll take a look at the week highlights in review. We saw a broad dollar sell-off stemming from a number of comments, including those coming out of the UN, hinting at a move towards an international currency. Though we've heard this rhetoric before, it was still equally as damaging to the greenback. In contrast to the dollar sell-off, the US equity markets reached new highs for the year. Commodities also continued their steady climb on the back of dollar weakness. For a closer look at some of the week's notables and with a look to the week ahead, we're joined by foreign exchange analyst Martin Smith. Welcome, Martin.
Hi, Kate.
So, do you feel that the dollar was oversold this week?
Well, there were a number of contributing factors, weren't there? First, we got those remarks, of course, from the UN Assembly you just mentioned. In the conference, they pointed out that in the global economy, having a strong reliance on one currency, well, does make for an increasingly challenging environment. Also, of course, you had the G20 agreeing that government stimulus would have to stay in place for some time to come, at least until underlying strength returned. And of course, these comments send a clear signal to traders that the dollar is going to continue its abundant supply. So, yes, basically. Well, actually, coupled to that, you've also, of course, got China, which stated late last week that they will be investing in new notes issued by the IMF. And the dollar sell-off in this context, of course, does seem appropriate, basically.
So, does that mean that you foresee the dollar weakness moving forward into the next week too?
Well, whenever you have a quick, strong move like this, as we saw this past week, well, in all probability, you're going to see a retracement. I mean, this happens for a number of reasons. Of course, at some point, you exhaust the number of buyers in the market. And traders, of course, are more inclined to lock in profits along the way. And having said that, I do expect the dollar sentiment to continue. Yeah, the weak dollar sentiment.
Are there any pairs in particular that you're watching at the moment?
Commodities have been on the rise, of course. Gold broke back through the $1,000 barrier. Then there's oil, holding steady about $70 a barrel, above $70 a barrel. I mean, you'd expect commodity-based currencies to perform well, and indeed they have. The Australian dollar, for example, broke through the 86 handle. The Canadian dollar trended stronger, and the Swiss franc dipped below 104 in a run towards dollar parity. We anticipate commodities to continue a slow but steady appreciation as investors seek return in that space. And in addition, China's continual stockpiling of commodities like copper, this also had an influence on commodities. And of course, it would be remiss of me to not mention the euro as well, as it broke through resistance and punched north at 145.50. Cable also is now headed northbound to the top of its range between 167 and 170. Looking at true strength indicators, it looks like these pairs will continue to push higher against the dollar, setting, in fact, new highs for the year.
So, in your opinion, what could actually cause the dollar to strengthen at this point?
Well, there's a whole litany of developments, of course, that could cause dollar strength. I think the fundamental issues actually at stake here are twofold. First, the US economy, whether it will experience a robust recovery or not, and also the US central bank. I mean, can it lead a balanced attack when the time comes to raise interest rates? As long as interest rates remain low, the dollar is going to take its place against the yen as the new carry trade currency. So I think until the US economy shows real growth, I mean, at sustainable levels, and the Fed raises rates in a measured fashion, we can expect to see broad dollar weakness.
Thank you very much, Martin Smith. And thank you for watching. Visit us at ufxbank.com for simple, safe, secure trading.